Hello and welcome to another update. Today we want to cover the SPX6900 token, which is an Ethereum-based token, and it's still quite a new one. It's a volatile one, so always be aware that there is risk. And why do I cover it? Well, it is one that actually was booked by one of our customers who allowed us to make it available on YouTube. So if you can do that as well, there are many coins that I obviously can't cover. There are just too many. But if you are interested in booking an analysis, you can, you get a bit more of a detailed video in this case. You can answer or ask questions. I will discuss these in the video. So it's a bit more of a detailed one, and you can book that one on our shop page on the website. If you opt in for YouTube publication, then you can get a 25% discount on that. So that's just the background, in case you're wondering why we cover a coin that I've never covered before. So that's the reason, and why it will be a bit, and that's also the explanation why it will be a bit more of a detailed update. So I know a lot of you guys are, however, interested in this one, but I just haven't had the time to cover it. So, that's a great opportunity. And thanks again for allowing me to publish it on YouTube as well. Now, this is the overall chart. Let me start, looking at the bigger picture, and then we dive into the microstructures. And I think there were also a couple of questions that I want to talk about. So, congratulations for everybody who bought it. Certainly a really good performance. The Elliott wave count, it is not it's not a chart with a super long history, but it is long enough to identify structure. Okay, and this here is specifically on Uniswap, so it's SPX wrapped Ether, and the price is currently around 144. And at the moment, this is on the long-term chart clearly a three-wave move up. So whenever I see something like that, I wouldn't necessarily want to go with the most bullish interpretation. It is certainly valid, and some analysts will do that we're doing this, and I know this is also the chart that was sent to me by email, right? Kind of showing here that we could do this. Well, we could. It's important to recognize that. Let me just need to adjust that. It is important to recognize, though, that this is maybe a bit hopium. So there's no guarantee. At least I would not. No, that's wrong. Well, I would not rely on that 4-5 pattern. I would not rely on that 4-5 pattern. Very, very important, because a lot of these coins, they top after 3 waves. And this is sort of in line with Bitcoin's chart at the moment, but the additional 4-5 is nice to have, but might never materialize. It's very important to understand. Many coins top after 3 waves, which means either way, the risk will be very, very high once this move to the upside is complete, right? I'm talking about the move up here in this C wave. Okay, we could get another 4-5, but that wave 4 will be substantial anyway, because it will be the same wave degree as this wave 2 or potential wave 2, which unfolded between October 23 and February 24. It's quite interesting, by the way, that this chart corrected while many coins were rallying in that period. And then it rallied while a lot of the other coins were correcting. But yeah, this took like, half a year, this correction, and it did lead to a decline of around 96%, okay? So please be aware of that. I'm not saying the wave 4 will, but it would be a substantial one. So it's a very volatile chart, very volatile cryptocurrency. Now, my preferred interpretation is the white scenario. And yellow is there to watch. To be honest, in the short term, it doesn't make any difference whether we're tracking the yellow count or the white count. But the yellow count is just more bullish. And if we get a 5-wave move on the long-term chart, by all means, it will have long-term potential. But this is something I would not rely on. We can watch for it. We can track it. I wouldn't rely on it. Now, we have this initial rally here in the white count, which would be an A wave. I can call that a 5-wave move. The microstructure is never super clear. I can make a case for a leading diagonal in wave A. Okay, you know, it could be wave 1, but I can call it a 5-wave move. What counts, I think it counts better though, due to the uncertainty of the initial spike. I think it counts better as a 3-wave move. Because, I mean, you can't recognize really anything in here. And it's also not so productive. It's gone now. Let me go back. Need to scroll to the left there. So it's better not to get, you know, try to make something up. I mean, that's just a straight line. So when we talk about microstructures, I would even label that as A wave, probably B wave, and then have to go to the 4-hour now again. And then a C wave up, and that C wave might even be the ending diagonal. I think that is even the better interpretation, especially when a little bit in doubt and when it doesn't really look right as a 5-wave move. It often makes more sense to label it as an ABC, even just if, you know, just for to be on the side of caution, right? But yeah, what we could then say is like we've got that straight line which is the A wave, which is quite long. Then we have the B wave, and the C wave itself is then the 5-wave move, like 1, and that's the diagonal, 2, 3, 4, 5. So I think that's the best count for this, just for educational purposes, because, you know, we're taking a look at the chart in detail, right? And you often get with these diagonals, you often get like a wedge pattern or something, which happened in this case as well. It broke down, which after an ascending wedge often happens. And by the way, when a pattern finishes with a diagonal, often the subsequent pullback is very, very sharp, which we saw here as well. Okay, so that led to a B wave low in February 24. I mean, at the time I didn't cover it, you know. It is difficult to base this typically on a startup candle, so it would have been difficult to determine like a standard support region, because, you know, you never know where it really starts, right? I mean, where does it become meaningful? So that's the problem with unreliable data on cryptocurrency charts, especially with a startup candle. So typically with a startup candle, I'm not happy calling out or calculating pullbacks or something. It might even make sense when we have a startup candle to use the linear chart, right? Now I normally use the log chart, but on the linear you can just start at 0, draw the fibs. But even here it broke even below the 88 point. It lost all support on the linear. On the log it didn't correct much, basically based on logarithmic movements, but percentage-wise, price-wise, it was quite a bit. But yeah, I mean, that's why, you know, the initial startup, it's always a bit ambiguous, but I think it counts best as 3 up, 3 down. This is an ABC structure down. This was certainly not 5 waves, which keeps the door open for higher prices, right? Okay, and then the next move up from that low was a 5-wave move. And we can call that again like a leading diagonal, a very similar move to here. Overlapping price action, but in 5 waves. So we have that leading diagonal, which would, after a 3-wave pullback, likely be the wave 1 of the next move up. Well, if that's wave C or wave 3, you know, we don't know yet. It doesn't matter. We don't know. And it doesn't matter because after a 5-wave move up, again, we're watching for the next pullback. So here there was one question. I think the question in the email was about you know, the customer was a bit surprised that the pullbacks were quite shallow. Well, this one was okay. It landed in a standard support region for a wave 2, and it also can make sense to consider, okay, how much was this actually in price movement? And that was 76%, not necessarily just by Fibonacci retracements on the log chart, but yeah, that was quite a lot. And it was a wave 2, most likely, especially given the rally afterwards, which looks best as a wave 3. So this was standard support, so it held support. 5-wave move up, 3-wave move down. Often what you get in a diagonal is an overlap between waves 1 and 4. All good. Now this is likely the 3rd wave, which I'd say it could be nearly done, or it could even be done. That's now where it's getting a little bit unclear, but that's what we're tracking now. So we have from the low an aggressive move up, 1, 2, 3. That would all be within the third wave here. This could have been a fourth internally. Now again, question about depth of the pullback. For a wave 4, we normally say it's the area between the 23.6 fib level to 50%. Okay, so not unusual there, okay? So it did hold, and I would say based on the proportions, this should have been wave 4. And now we're likely in wave 5. Now, a few things here to say. I mean, this looks already as if it could have topped, but I don't see clear 5 waves yet, so it might actually form one more high in wave 5 of 3. What we can do in addition is calculate targets by taking the length of waves 1 to 3. Okay, question is then on the micro level, really with a a very small cap coin, or like any when there's volatility on these DEXs. This is on a DEX. Can we expect that much precision? So I still measure it. So we take the length of waves 1 to 3. I go to the low of the wave 4. I mean, all I want to say is, do these wicks really matter? So we have to take this always with a bit of a caution. So what would be like standard targets, for that wave 5 there? And actually, based on textbook, it would be the 284 level for this fifth wave. So I'm not sure if it gets there. I mean, that would be another nearly 2x from here. Another way of measuring, by the way, would be to take the length of the wave 1. We go to the low of the wave 4. And the 100% extension is a key target. I think it's the same level, isn't it? Yeah, so there is some confluence around $3. So, I mean, maybe it's going to get there, okay? It seems a bit far away, but actually, the thing is it obviously reached already a higher high, so technically circle wave 3 could have topped. But okay, based on micro patterns, it could be on its way higher. I would label this, I mean, if we really dive into the micro, I would even say 1, 2, 3 as a diagonal, 4, 5. And at some point, micro counting doesn't make any sense anymore, but this here is reasonable. Also, given that within an internal fourth wave, if this is a diagonal, I mean, it even held the 50% retracement. Normally, we would even give space to the 61.8. So in terms of, depth of pullbacks, I think it's actually okay. Doing what it's supposed to be doing. Reacted perfectly to the 50% fib level. So it might have started wave 5. And then, because this would be a diagonal, best I can tell, also this would be an A, B, C. So it might give us a bit of a pullback before going higher. I have to say, though, any break below 73.6 cents would indicate circle wave 4 has started. And we can already define support for circle wave 4, which is lower. This would be based on an overall impulse, though. So while the internal fifth is a diagonal, the larger fourth would be an impulse because it's moving in 5-wave structures. That's actually not a bad chart. I mean, it moves in patterns that are you can recognize them. That's not always the case with all charts. Bear in mind, this support area now, it will need to be adjusted should the price move higher. Okay, it's just there for initial orientation, and we're far away, but yeah, I mean, you might say, this is far away, 45 cents to 11 cents. If I see this, I mean, it might, if Bitcoin forms that one more high, if you follow the Bitcoin analysis and gets to 130K, I mean, that, it might get into this blue region, right? It might even push a bit higher than $283. And then that could be it. And this would be like bear market quality, yeah? I mean, imagine it goes all the way up to 280. Okay, I would have to adjust support then, but we talk about 30 cents or something, right, as ideal time. So that's why I think it might do this one more high. It seems reasonable, especially as long as 73 cents is holding below that level. Be careful. I mean, to be honest, ideally the low is in. So ideally it holds that last swing low from January, pushes higher in wave 5 of circle wave 3. Okay, technically it could extend a bit this correction down to 73 cents, but ideally the low is in. And then, okay, if it breaks below 73, you know, that is where we have to say, okay, circle wave 4 probably. Then the next question will be in a bear market or major correction, will it actually hold that? You know, that's other questions we will then need to answer when we look at the chart. Therefore, this additional 4-5, not sure if it's going to do that. And this year, I mean, this would be like probably Q1. You know, timing is difficult, but that's what I would say. It's not needed. It's already probably done most of its rally. And the risk is high now. I mean, we talk about another maybe 2x. That's not much compared to what it did already. And I'm not saying it will have to stop there, right? I mean, technically speaking, such a fifth wave could easily extend to the 61.8. So it's a matter of understanding the bigger picture and then on the micro level, stay close to it, understand which levels need to hold. I mean, for now, I would prefer if it doesn't even break below the January low here. We can draw a red line there. Okay, if it does, if it needs to, it could extend a little lower, but shouldn't really break below that upper support. And really, in terms of microstructures, best I can tell, it might push a bit higher, but then complete an A wave, do a B and a C. So that should give you all the information. Now, long-term targets, you can't really establish them. We have to take it level by level. There's a target area there. There's a support area there. This target area is at the moment fixed. This support area is likely still to change depending on how high we go. And only really when the wave 4 is bottom, then we can calculate a target for circle 5. That's probably a bit further in the future. But that would definitely, you know, it could be an interesting one from a reward to risk point of view when it gets into this support area here. So I hope that helps. That's the update about SPX6900. And the only other thing we could do, think about it, is to add some micro support for the B wave, but then be aware we don't even have a top in A. B waves can also overshoot to the downside, so but this would be a standard support area that applies right now. It's between 79.4 cents and $1.24. Okay, so hopefully that answers the questions. Again, thanks for allowing me to update or to publish that on YouTube. So if anybody's interested, you can book an analysis on the website. You also get the live chart link with the analysis. Thank you very much. Bye-bye.